Thank you for joining us at xm.com for this Forex Preview video. I'm Christina Marujos, and joining me today is Mario Sajikiriakos, investment analyst. We'll be taking a closer look at U.S. retail sales out on Tuesday. The optimistic headline for Pfizer's vaccine was greeted with joy in the markets, but soon doubts crept in whether this will allow the Fed to step off from the stimulus accelerator. Could retail sales numbers out of the U.S. on Tuesday, Marios, tip the Fed in adding more financial support in December?
Hello, Christina. Yes, they very well might, especially if we see a disappointment in the data. Now, let's back up a little bit. If you look at U.S. economic data over recent months, you could conclude that the recovery is doing very well. The jobs market is continuing to heal its wounds. Inflation is running at a decent pace. Consumption has bounced back. And the latest PMI suggests that businesses are very optimistic about the future. However, everything is not rosy. Infection numbers have exploded in recent weeks. A lot of states have been forced to impose tougher restrictions on social life so that healthcare systems are not overwhelmed. And on top of everything, fiscal stimulus is probably not coming anymore after the result that we've seen in Congress, where the Republicans have retained control of the Senate. Adding everything up, I believe that the Fed is likely to move in December, especially because after the vaccine news, we also saw a spike higher in US bond yields, which is not good news for the Fed, basically, because it implies a slower recovery the higher borrowing costs go. So even though the picture for next year has improved now that the vaccine is on the horizon, I think that the Fed has a lot of incentive to do more in December, and the question is, what will they do exactly? Will they just increase the pace of QE purchases, or will they also shift towards buying longer dated US bonds, for example?
Now, taking a look at the bigger picture, we've seen other central banks from around the world announcing more programs to support their economies. Bearing all this in mind now, what is the outlook for the dollar?
Well, if we do speculation rather for the Fed acting again in December pickup, that would argue for some weakness in the dollar. And another risk that I see on the horizon is a national US lockdown starting to be priced in if cases continue to soar. Trump is not going to lock the country down, but Biden might very well do that when he gets into office in January, and that risk is not priced into the dollar, I believe. So there are a few short-term risks for the dollar. Another one is a potential resolution to the Brexit drama. If we see a Brexit deal, the dollar could also move lower. So yes, the near-term risks have increased, but at the same time, I would not expect to see euro-dollar trading above 120, for example. I believe that that level has been a line in the sand of sorts for the European Central Bank. They have been very vocal about the exchange rate, that they don't want to see the euro rising much further from here. So while we may see the latest wave higher in euro-dollar continue, I would also not expect to see a break above 120 anytime soon.
Marios, thank you for joining me today, and thank you for watching this Forex Preview on U.S. retail sales here at xm.com.